Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Lebanon and Hezbollah have reportedly reached an agreement on a U.S. plan for a ceasefire with Israel, as one of President Joe Biden's senior Middle East advisors is on his way to Beirut. Asian stocks follow Wall Street gains as treasuries halt a sell-off. The Nasdaq 100 also ending a 5-day slide ahead of Nvidia's earnings report tomorrow. And Donald Trump's team is set to consider pairing former Fed official Kevin Warsh and hedge fund manager Scott Bessent in leading economic roles. It's just gone 8 a.m. across the Emirates. I'm Joanna Versace, back in Dubai. I've been away for a long time, but I'm here to stay, at least for the next couple of weeks. Let's see how it goes. Good to be back here. Let's check in on how some of these markets are faring, because we saw, 5 days of back-to-back declines last week for NASDAQ. It wasn't a pretty week as some of that Trump trade euphoria started to fizzle out, and we stabilized around these levels. Yesterday, Wall Street did end up in the green, slightly in the green, I should say. Today, you can see that the futures are leaning as well towards more positivity. Both the S&P and the Nasdaq up about 0.2%. So much going on here, so much to digest in terms of the data that's coming through, anticipation of what the Fed is going to do with their rate cutting cycle, in addition to all of the ongoing noise around Trump's selection for Treasury Secretary. We're going to talk more about that on the show. So just park that for a moment. In addition to that, by the way, Nvidia earnings coming through tomorrow will be a key driver of stock performance from here. 10-year yields were sort of hovering in at around 440 now. So we got to 450 level, came back in. We rallied about 3 basis points yesterday. Again, stabilizing around 4.4, 4.5. But there are some voices out there saying that this push higher in yields could continue, especially as potentially we could see a bit of an inflationary shock from tariffs next year in the U.S. economy. And then Brent in focus as well. Today, again, seeing a bit of green on the board, up 0.2%, building on some gains from yesterday. Though, once more, the theme for the energy complex has been downward pressure coming through, especially last week when you had those revised demand projections, I should say, coming through from the IEA and OPEC, suggesting lower outputs and lower demand picture for next year. That, again, exerted some pressure on the energy complex. This is our terminal chart today. I thought it was interesting to highlight that there's been a bit of a rotation trade going on in ETF space out of gold and into Bitcoin. So again, as we've been speaking about since the U.S. elections, Bitcoin and the crypto community as a whole has been a beneficiary of Trump's return to the White House. And here you can see it's also being reflected in ETF positioning. People are taking out some of their long positions in gold and adding to their positions in Bitcoin. So that is interesting and something to note as well. Let's see if it continues. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what are you watching out for today?
Yeah, we're watching for how Asia stocks, whether they are catching that tailwind from Wall Street. So far, it looks pretty positive, 1+% on the region's benchmark. And this is mostly tracking the gains in the U.S. as we see lower yields making equities look a bit attractive. The greenback softness that we're seeing today is also helpful, and almost all of Asia's currencies are gaining ground, including the Japanese yen, which is getting an added boost from verbal intervention from the Japan finance chief talking about these excessive FX moves. Clearly, that's something that the Japanese authorities do not want to see. But I wanted to highlight what we're seeing in China on the mainland. The CSI 300 is sliding for a fourth session, as is the Chinese currency, looking quite soft today. And this is amid concerns about China's growth, but also Trump's tariffs. Jumana.
Avril, thank you so much. That was Avril Hong in Singapore. Now, Lebanon and the Hezbollah militant group have reached an agreement on a U.S. plan for a ceasefire with Israel and made some comments on the content, according to a report from Reuters. A U.S. official cautions that negotiations were ongoing. Meanwhile, Amos Hochstein, one of President Joe Biden's senior Middle East advisors, is said to be on his way to Beirut to continue talks. So for more on this, let's bring in Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. Stuart, as ever, the devil is in the detail. And in this case, it seems as though the reporting suggests that Lebanon has agreed to a ceasefire proposal, but with, quote, some comments.
Yeah, and that's the critical bit of all of this. So we've known for the last couple of weeks that the Lebanese government was in favour. This is probably the first indications that Hezbollah is moving in the same direction. But it's that phrase, with some comments. What exactly are those comments? Do they set out red lines that are going to be unacceptable for Israel? I mean, we'll see over the next several days, but I know one of the key sticking points has been Israel's insistence that it has a right to intervene in a scenario where they implement this, the so-called Resolution 1701 or something along those lines, and then they alert the Lebanese authorities and the UN that the Hezbollah are moving back into southern Lebanon. Nothing is done about it. Israel reserves the right to intervene unilaterally. That is going to be the critical issue here, and it doesn't feel like that's off the table yet.
Is there an inkling that on the Lebanese side that there's a willingness now to actually accept the 1701 terms, which were obviously the terms that were put forward after the 2006 war, weren't adhered to, weren't implemented at the time, but this time around, could things be different?
Yeah, elements of it. I mean, look, there's another critical point in that resolution, which is de-arming all militias in Lebanon. And I think the odds of that happening, Hezbollah agreeing to lay down all its weapons, are quite small. Now, I don't know that for a fact. I'm not inside that leadership structure, but it seems vanishingly small chance that that's going to happen. And if that doesn't happen, then what are the odds that the rest of that resolution or the contours of that resolution can be implemented?
Stuart, thank you so much. That was Bloomberg Stuart Livingstone Wallace on the latest out of the region. Well, moving on now to talk about U.S. developments. President-elect Donald Trump is assembling a cabinet that prioritizes loyalty and a willingness to quickly implement his America First policies. For more, Bloomberg Asia senior editor Bill Ferries joins us now. Well, Bill, I was just at the top of the show talking about markets gyrations, and one of the big announcements that investors are watching out for is who is going to be the Treasury Secretary. Lots of names have been put forward. At one point, it seemed like Scott Bessent was the front runner. That's been dialed back. Just tell us what is going on. Who is the front runner right now, and when can we expect a decision?
Yeah, it seems the longer this drags out, with all the behind-the-scenes infighting, the more new names float to the surface. What we're hearing right now from our sources is that, as you said, Scott Bessent appears to be seen as a potential candidate to head the White House National Economic Council, which would have him right there in the West Wing advising President Trump on economic policy, but would not have him at the Treasury Department. One name we are hearing for Treasury now is Kevin Warsh, a former member of the Federal Reserve Board of Governors. He was there through 2011. He was considered to be, he was a candidate to be the Fed chief under Trump before he eventually turned over to Jay Powell. So he's someone who's been in President-elect Trump's orbit for a while. He's apparently traveling to Mar-a-Lago. We believe he may interview with the president-elect on Wednesday. So I don't expect we would hear a decision before then. And then there's Howard Lutnick, the CEO of Cantor Fitzgerald, who's been helping President Trump assemble his team. He's a co-head of the transition. He appears to no longer be a candidate for Treasury Secretary after a late lobbying blitz. That said, it is Trump world, and things can change very quickly. You're not fully in or fully out until President-elect Trump makes an actual decision. But it could come this week. We expect that interview with Kevin Warsh to perhaps take place on Wednesday.
Okay, that's good to know, and a good signpost for the rest of this week. But it's not just about the Treasury Secretary. Another very controversial pick was the Attorney General, Matt Gaetz. The decision continues to draw scrutiny. How likely is it that Gaetz is going to actually make it to a confirmation hearing at this point?
Well, the big question with Gaetz is whether that House Ethics Committee report on allegations that he engaged in drug-fueled parties with minors, whether that becomes public or not. The actual House Ethics Committee is expected to meet on Wednesday and vote on that. They're getting quite a bit of pressure from Speaker Mike Johnson not to release that report. But Republican senators are actually leading the charge to get their hands on that. They say that some of the underage, at the time, women who were at those parties may testify in any confirmation hearing. And so I think that report will come out either publicly or get leaked in the coming weeks. Any way it comes out, it's likely to be a very difficult hearing for Gates. But Axios is reporting that President-elect Trump is still continuing to lobby on his behalf. He's not giving up on his pick. And so there's still time to convince senators to either back off and consider the vote or harden their positions before those hearings take place.
Yeah, and let's talk about one other nomination. Sean Duffy, the new pick for Transportation Secretary. Also an interesting one because Trump has pledged to roll back some of those EV credits. What do we know about Sean Duffy, apart from he also is a Fox News contributor?
Yes, right. He is I think he was a 4-term congressman from Wisconsin, so he has some experience up in the Capitol. More recently has been on Fox News as a contributor and a co-host on some shows. That's going to be, you laid out one of the trickiest things he'll have to deal with, along with issues like highway expansion and rail networks. But it will be the EV system and how much support the federal government provides for electric vehicles. Trump was very critical of EV support and subsidies during the campaign. But of course, Elon Musk came in ahead of Tesla, who has long wanted to see more support for EV networks and has been supportive of federal subsidies. So how someone like Sean Duffy navigates that may well determine how long he's able to stay in that position as Transportation Secretary, assuming he's confirmed.
Yeah, super interesting. Well, let's see how this all plays out the rest of the week. Bloomberg Asia senior editor Bill Ferries, thank you very much. Now, Ukraine's allies are pushing Volodymyr Zelensky to consider new ways to get Russian President Vladimir Putin to the negotiating table. 2 European officials say there's a growing recognition the Ukrainian leader needs to compromise, as neither side can secure a victory. We're told that German Chancellor Olaf Scholz also urged Putin to engage in peace talks in a recent phone call. And still ahead, hear why Nomura says Japan remains a standout opportunity, offering a combination of macroeconomic stability and structural reform-driven growth. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Asian equities have advanced this morning following gains in U.S. stocks after Treasuries halted a sell-off that had pushed 10-year yields as high as 4.5%. Let's bring in Gareth Nicholson, CIO and Head of Managed Investments at Nomura International Wealth Management. Good to have you with us. Let's just talk about the price action over the course of the last week. We had the post-elections euphoria for Wall Street that sort of fizzled out or stabilized somewhat throughout last week. And now we are seeing things holding ground and holding steady. What do you see as the path forward from here for U.S. stocks?
Well, Joanna, firstly, thank you for having me. I think you're 100% right. It has slowed down, but really at 25%, year-to-date, the S&P, this has been a fantastic run. Just to pause, to settle down before the last stretch, it's almost like we're doing the victory lap and this slowed down. And we do believe that U.S. equities will continue to see that strength. There's 2 big catalysts that are still pushing through. Retail sales, you had $56 billion worth of inflows from the retail buyers in U.S. equities. And then on the back of that, it's also corporate America's time to step up with buybacks. Yeah. So November, December, big time for buybacks. And that really builds that base, that kind of sticky asset allocation that we think is going to continue to support into the end of the year.
Yeah, it's interesting because when it comes to the Trump trade, there's so much speculation as to what they're going to do. Earlier on, we were just talking about the various nominations for different roles in the cabinet, Treasury Secretary, obviously a big one. From a Trump catalyst perspective, in the absence of further detail, which we're not going to get before January, February of next year, it seems like at this point it's mostly just going to be a guessing game as to what this administration may eventually end up doing.
Yeah, and I think we could replace even guessing with just momentum. Where do people feel most confident sitting at the moment in something and waiting to see where it's going to go? People are fingers on the trigger to decide if they're going to move away, but at the moment they're comfortable holding on to the big names, they're comfortable holding on to US dollar, onto US equities, and we think that will continue until we see a bit more clarity.
Yeah, the dollar has seen a bit of a breakout moment. Again, do you think that continues and this new concept of US exceptionalism is going to stay with us in 2025?
We think the investment buffet, if you would, for clients, for everyone, it's just grown. So yes, US is still going to be the main dish, no doubt about that. But at these levels, we shouldn't forget that Trump was a great catalyst for the markets, but the market was a lot cheaper back in 2016 compared to today. Yeah. So it needs huge motivation for it to move forward. And we're only going to see the real tax breaks and tax incentives later in the year. So for us, yes, it's going to be strong, but investors are going to have to broaden their palettes if they're going to have stable income in 2025.
All right, let's talk about broadening the palettes. Dollar yen is about 154 now, so we've come a long way as well since the U.S. elections with the rebound in the USD. What does that do to the Japanese market?
Well, there's two areas to focus on that. One, we think that we're still a little bit away from proper intervention, more like 157, 160, around there. That's typically a quick acceleration to there we'll see intervention. So that's one side. But it's also important to realize that the Japanese stock market is not that correlated as it was in the past to the currency. Yes, it is, but post-COVID, post a lot of the manufacturing actually being taken outside of Japan and moved more broadly, the Japanese FX and the equity correlation isn't as much when it comes down to earnings. So we do believe that this is a nice catalyst to get more capital inflows into Japan, but is one of many catalysts supporting Japan.
What about that so-called yen carry trade that sort of sparked the massive sell-off in August? Where do we stand on those trades now?
Well, I think the large driver of that was fast money, hedge fund money that was in that. And the unwinding of that was why we saw such quick momentum. When we look at flows, we don't see the hedge funds building up such a big position at the moment. So it's a bit cleaner. It's going to be a bit more of a stable move once it settles down. And for that, looking at Asian equities, for instance, Japan is the bright spot. There is a number of moving features, but we think there's still more tailwind behind Japan than most.
Yeah, but Japan also imports a lot of oil, and you have to wonder in an environment where the president comes back to the White House and imposes tariffs, renewed protectionism, Japan is going to be one of the countries that's going to be exposed to that from a pure trading perspective and tariffs.
Absolutely. And that's why we think that Japan actually, if we do see stronger currency, which is our base case, that we do see stronger currency from here, that's going to be constructive for the equity market of Japan to bring in those commodities, bring in those raw materials that they need to be able to manufacture the things that they do and to keep the economy functioning. Like you said, they're still an energy importer, albeit our house view is that energy will not be that volatile. Whilst there will be more tariffs and restrictions, we also think there will be more energy infrastructure and increase of supply of energy in the US. So almost offsetting that, maybe get a little bit of a stability in the oil market, which is good for global markets.
Yeah, let me round up your central bank views then. Bank of Japan, how many hikes do you see for next year? And equally, how many cuts do you see for the Fed? Because that's relevant for the currency.
So we think Japan, BOJ, can be very reactive. They can really focus on what the Fed is going to do, and from there we will see a reaction. So we don't think they're going to be leading the way. We think there's going to be one and a relative pause going through, waiting to see what the Fed is doing. Now, the Fed is the really interesting one. We still have a cut in December, and we have only one for next year, which is a big shift from what we were previously. And I think this is the optionality that Powell and the committee want to build in because, as you said, we don't know until January, February, when policies start really coming in. And I think that's going to be for investors. The key one is waiting for which way are we going to move. What is the core part of the portfolio and what is the satellite, the exciting bits, the Bitcoins, the other parts of the market which we can play around the volatility, but you still need that core.
Yeah, brilliant. Well, that's a good place to leave it. Only one cut in 2025, a big call. Gareth Nicholson, CIO and Head of Managed Investments at Nomura International Wealth Management. Well, coming up, Zimbabwe's currency drop hits the budget as the country prepares to mobilize additional resources to cover critical, unavoidable expenditures. We'll have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Zimbabwe's currency devaluation is forcing the government to cut spending on some budget items. The country's treasury has asked government departments to prioritize their spending commitments for the rest of the year. Let's bring in Bloomberg's Andira Ganga, who joins us now from Kigali in Rwanda. Andira, just give us a little bit more color on what to expect into this upcoming budget, given some of the pressures and the spending pressures that Zimbabwe are facing right now.
Absolutely, Jumana. So this is a government that this time around, they have to mobilize resources because, like you mentioned, they have crucial yet unavoidable expenditure. They have the 2024 bonus awards coming up, and this goes to civil servants at the end of every year to thank them for their service to the nation. And because of this, they take home double what their monthly salary always is. Then you have food importation. Zimbabwe is a country that is currently grappling or has grappled with drought, and its effect is being felt until today. So a lot of money needs to go into buying food to ensure that there's no deficit in between as they wait for the next agricultural cycle. There's also a lot of money needed to go and buy agricultural input and supplies to ensure that they are ready for the next planting season. There will also be budget cuts, and there's some facets of government that will have to bootstrap. They'll be looking to cut foreign trips because this attracts a lot of per diem and also travel expenses. There's also local workshops that go out of town and attract more expenses to these ministries. And they'll also be looking to reduce fuel coupons by about 50% moving forward. And this budget is really interesting. It's being presented at the end of the month, yet the bids that the Ministry of Finance has received is about 700 billion ZiG, which is above the ceiling of about 145 billion ZiG. And this is being attributed to devaluation of their currency and also high inflation.
Ondira, what's interesting is our colleagues had an interview with the Zimbabwe finance minister last week, and he sort of painted this more resilient and upbeat picture for the Zimbabwean economy than the data would suggest, saying that the economy is resilient despite the drought. They're hoping to work on this debt restructuring with a meeting coming up in the next couple of days. How would you say the country has been absorbing some of the recent economic shocks, and square it up with the commentary that we got from the finance minister? It's a bag of mixed goods, Jumana, because on one hand, you have their currency, which was only launched in April. And when it was launched, it looked like it was really going to endure the test of time. It was backed by gold, and it has lost nearly half of its value. The central bank was forced to devalue it by 43% because there was a supply and demand mismatch in terms of dollar demand. And because of this, we saw the ZiG was trading in the parallel market twice what it was trading in the official market. Because of this, it funded inflation to about 7.2% from 5.8%, which is a really big jump. This prompted the central bank to hike rates from 20% to 35% and also devalue their currency. In terms of resilience, here's a point, because this year, despite Zimbabwe having experienced the worst drought in about 40 years, the economy is projected to grow at about 2% in comparison to 2019, where they dropped to negative 7%. And the government made a couple of decisions. They decided to open the borders, allow anyone to import food who can afford. The only problem is cost. Yeah. Bloomberg's Ondira Ganga in Kigali, thank you so much for the reporting. Well, a quick look at equity futures before we head to the break. We saw stabilization on Wall Street yesterday. The close was positive, and all of the futures heading into the European session are seen opening up in the green as well, including European futures seen up 0.4%. Well, coming up, Dubai International Airport is on track to break passenger traffic records this year. We speak to the CEO, Paul Griffiths, next about what's driving the momentum. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Lebanon and Hezbollah have reportedly reached an agreement on a U.S. plan for a ceasefire with Israel, as one of President Joe Biden's senior Middle East advisors is on his way to Beirut. A Hong Kong court sentences former democracy activist Benny Tai to 10 years in prison under a China-imposed security law. And Dubai International Airport has retained its title as the world's busiest airport for the 10th consecutive year. We speak to the CEO, Paul Griffiths, on what is driving demand. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. A look at your markets. We saw a slightly more positive close for Wall Street yesterday for both the S&P and the Nasdaq after 5 days of decline for the Nasdaq. The worst week for Wall Street in the last couple of months. So that was the week last week. Today, things are looking up. S&P futures up about 0.2%. Nasdaq futures up 0.3%. Focus is going to be on NVIDIA earnings coming through tomorrow. So keep an eye out for that. In addition to what we were discussing discussing early on the show, Trump's selection for a Treasury Secretary is going to be key for markets as well. 10-year yield sitting at 4.4%, again stabilizing here. We broke through 4.5 at one point, but yesterday rallied back around 3 basis points. So again, the theme has been stabilization the last 24 hours. Brent as well, 73.50 is where we're at. A bit of a bounce yesterday, today up 0.2% too. Our terminal chart today, this is the picture for ETFs of Bitcoin and gold. Interesting to highlight that, as you can see, we're seeing outflows out of gold and into Bitcoin as the crypto community and the crypto currency space continues to enjoy a good run since the re-election of President Trump back to the White House. So quite interesting there, and just shows you gold obviously has done so well this year, but in the last couple of weeks, some of that rally has started to lose momentum. The rally is faltering as money goes back into Bitcoin. But let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just give us a run through of how these Asian markets are faring.
Yeah, Asia's stock gauge is higher, but the outlier today is what we're seeing on the mainland. The gauge, CSI 300, down for a fourth session. And part of what we're seeing in the markets is how foreign investors are souring on Chinese equities as they don't see much in the way of improvement in China's growth. You look at earnings season. I mean, MSCI China, we're about 90% plus of the way through reporting, and we've seen about 60% misses. So to put things in further context for you, take a look at this chart. It shows you China ETF's record outflows last week. And if you look at the iShares China Large Cap ETF, for example, it was something like $984 million of outflows. This is a record, and I think it's for the 5th straight week. So this really speaks to the sense of how Western foreign investors, they really shifted the sentiment towards China. And this underperformance, of course, is something that's been exacerbated since the US election. Jumana.
Avril, thank you so much. Dubai International has retained its title as the world's busiest airport for the 10th consecutive year. In the first 9 months of the year, the Emirate welcomes 68.6 million guests and is on track to break traffic records by the end of the year. Joining me now is Dubai Airport CEO Paul Griffiths. Another milestone, it would seem. The numbers just keep going up. Talk us through some of the momentum that came through in the first 9 months of the year and what the outlook is for year-end.
Well, we're back to a record number. We've beaten all-time records now. We actually had something like 7.62 million customers through DXB on average every month through the first 9 months of the year. And we're headed for 93 million towards the end of the year, which will, as you said earlier, retain our crown as the world's busiest international airport. And it's been a particularly good time because we now have 250 separate cities connected through DXB in 105 different countries with more than 90 airlines serving. So we're very, very geographically well spread with a huge range of destinations, which is, I think, adding to the momentum of our overall growth.
I'm curious to see the breakdown between direct traffic versus transfer passenger traffic. How has that breakdown evolved the last
Well, it's
few years?
very interesting, actually, Jumana, because before the pandemic, 60% of customers coming through DXB were actually travelling on to another destination and 40% were coming to the city. But because the government and the whole of Dubai really pulled together and did such an excellent job to recover very quickly from the pandemic, confidence in the city recovered so much that actually flipped, and 60% of all incoming passengers were actually going through to the city and 40% travelling on elsewhere. Now it's actually equalised around 50-50 between transfer and direct traffic, which is very healthy because, of course, the huge economic multiplier of visitors to the city is plain for us all to see here.
Yeah, that is interesting. In terms of city destinations, I saw London remains the top city destination with 2.9 million guests. I saw that in your report, followed by Riyadh, which is interesting. The city saw strong growth, 2.3 million guests. That's almost a 26% increase. From your numbers, can you tell how much of that is tourism versus business travel?
It's rather difficult to tell the breakdown, but the interesting thing is how those cities have moved relative to each other. We've seen huge increases in the amount of traffic between KSA and Dubai over the last few years, and it's not surprising that Riyadh, as you say, is our number 2 destination. Interesting, though, the growth of China has been about 40% over the last few months, and we're back to 85% of pre-pandemic levels with Chinese traffic visiting the city. So that's a very encouraging sign for the future.
Yeah, how do you see the competition with other regional airports as well? Abu Dhabi making a push, Riyadh, we just spoke about Riyadh and their big push for tourism as well. Is the rivalry growing? Is the competition growing in the region?
I think no one has the combination of a fantastic city that's been growing at the rate that Dubai's been growing and great connectivity through the airport. So those two things have really supported one another. And if you look at the split between our visitors to the city and those that are transferring through, we have a very, very high proportion. If you compare that with other cities, the amount of direct traffic is a very small proportion of the overall numbers. So I think that is giving us the confidence to predict that by 2027 we will hit the 100 million mark of guests through the airports, which will be another milestone for DXB.
Yeah, and I remember the last time you were on, you were talking about some of the technological advancements that allow you to take advantage of all of the space that you have to accommodate so many passengers. Speaking of technological advances, there's some reports out suggesting that DXB International Airport is moving towards removing all physical passport controls, including no counter stations, gates, or immigration officers at passport control. Travelers will simply be able to walk through with face recognition. When is that going to be activated, and how soon can we expect to see it?
Well, actually, most of the technology to achieve that actually exists today. The challenge is going to be adopting it into a live operational environment. But this will be a wonderful test bed for all of the things we're taking away from airports, because no one really wants to stand in line for anything anymore. And if we can make the whole process recede into the background with the latest technology for, as you say, check-in, baggage, passport control, security, then the idea is that people will be able to breeze through the airport much quicker than they can today. And the thing is, no one I've met really wants to spend more time standing in line at an airport. They'd rather us take all that process away. And of course, we get a big benefit. We get great customer service. If you can speed people through the airports in half the time, in the same space, you've got double the capacity.
Yeah, no, absolutely. So I'm definitely on board with that. Speaking, maybe talking my book, but as a parent of 2 young children, how does that technology work with the younger faces? Is that going to work with children?
The difficulty at the moment, of course, is we can't accommodate children with the facial recognition technology. But I'm sure there'll be a solution. Maybe by exception, we can improve the whole process for those that have to use the conventional pass-through. But I'm sure there'll be a solution. And if there is a solution, I can promise you DXB will adopt it first.
That's a good place to leave it. Paul, thank you so much for your time and for sharing the outlook on passenger traffic after another milestone being reached. Dubai Airport CEO Paul Griffiths. Now, former St. Louis Fed President James Bullard says monetary officials don't have to move much to arrive at the right rate for the economy. But he tells Bloomberg he's not expecting the Fed to stand pat next month.
If it was me, I think they could make one more move here in December, and then that would put them at 4 3/8. And then there'll be a debate about where neutral is. But if you thought the median of the committee thinks neutral is maybe 3%, then you have to have maybe 100 basis points on top of that, or 125 even, because inflation isn't all the way back down to target. So normally you would take the inflation difference and then multiply that by 1.25 or 1.5 or something like that, and that's what a Taylor rule would do. That's going to put you right around 4%. So they'd actually be pretty close to where they'd want to be. They'd have another move to make maybe in the first quarter or second quarter, and then after that it would depend on where inflation went during 2025. So they're in pretty good shape here, I think, for the December meeting.
Jim, maybe for December, but moving beyond that, there's a real question. I haven't heard a lot about long and variable lags in a long time. And basically, there's this feeling that maybe if markets are flying and we have this feeling that businesses are doing just fine, that everything can chug along at these interest rates. And you alluded to it. We could see a higher neutral rate. Just how much have you heard a change in tone from Fed officials over the past couple of weeks?
Yeah, well, they've made 75 basis points of cuts already, so they're not in the same situation that they were in, say, June or July. And I think the growth scare that occurred in sort of the July-August timeframe has dissipated, and now you've got GDP now, Atlanta Fed at 2.5, and the last 2 quarters of growth have been pretty strong, certainly above potential growth rate for the U.S. economy. And so I think, they don't have to go too much further to be at the right rate for this level of inflation and an economy that's, moving along pretty well.
Former St. Louis Fed President James Bullard speaking with Bloomberg's Lisa Abramovich. And coming up, a Hong Kong court sentences dozens of former democracy advocates to prison for up to 10 years under a China-imposed security law. We're live at the courthouse next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. A Hong Kong court has sentenced former democracy advocate Benny Tai to 10 years in prison, the longest sentence ever meted out using a China-imposed security law. China correspondent Min Min Lo joins us now from outside the West Kowloon Magistrates Court. First of all, Min Min, just give us more details on Tai's sentence here.
Yeah, the court proceeding actually was really quick. It was less than half an hour. The sentences of these 45 defendants were released at a go. And Benny Tai, as you said, he is the highest profile among the 45. He was deemed as the principal organizer of this unofficial primary election back in 2020, which was deemed by the judges as an attempt to undermine the government. And so he is charged, all these 45 defendants are charged with a conspiracy to commit subversion. And Benny Tai was sentenced to 10 years in jail. The starting point of his sentence was actually 15 years, but he got a third reduction of his sentence for the guilty plea. And the other 3 co-organizers that assisted Benny Tai in organizing this primary election, they got between 6 to 7 years in jail. They got a lighter sentence because they had turned into prosecution witnesses against some of the other opposition members here.
Min, what kind of reaction are we expecting to see from the rest of the world as this decision came through a short while ago? Is there going to be any international reaction?
Yeah, certainly this case is closely watched because earlier today we did see the consulate members, some diplomatic staff from various consulates of the British, Australia, France. They were all here to attend the proceedings as well. And just on Monday, you have the British Prime Minister meeting with President Xi on the sidelines of the G20 summit in Brazil, raising his concern over China's human rights records as well as the deteriorating health of Jimmy Lai, who is of course another defendant who is going to take to the witness stand tomorrow for a different national security trial case that is separate from the one that took place today. He was barely able to register his concern before those British press were asked to leave the room by the Chinese side, and you can tell how contentious and how sensitive this issue is to Beijing. Beijing has obviously said that the national security law is extremely essential to maintain stability in the city, even as other Western democracies has criticized it as clamping down on the sort of political freedoms that they said are supposed to be protected under that one country, 2 systems model when Hong Kong was handed over to mainland China in 1997. And so since then, we have seen an exodus of foreign judges from the Court of Final Appeals, for example, and you have countries like the US saying that these trials are politically motivated and asking for these defendants to be released.
Well, you talk about the trials being politically motivated. Who are some of the other prominent individuals who are also being sentenced today?
Yeah, there is also Joshua Wong. You might recognize him. He is the face of that umbrella movement back in 2014, the former student leader. He is charged, he's sentenced to 4.6 years in jail for being an active participant in that unofficial primary election. And for context, the maximum penalty for principal offenders, people like Benny Tai, the maximum penalty would be life in prison. And for those who are active participants like Joshua Wong, the maximum penalty, the penalty is basically between 3 to 10 years. He was charged with 4.6 years. And others like Claudia Moore, for example, the former AFP journalist and also an ex-lawmaker, got 15 months in prison. And we got varying lengths of sentences for many of these defendants, depending on the mitigation pleas and the circumstances around their participation.
China correspondent Min Lo, thank you very much. She's standing outside the West Kowloon Magistrates Court in Hong Kong. Well, the Singapore court has sentenced oil tycoon Lim Oon Kon, also known as Oki Lim, to 17.5 years in jail for cheating HSBC and instigating forgery. The judge says a deterrent sentence is justified and no concessions would be made for Lim's medical condition. The 82-year-old founder of Hin Long Trading is appealing. Lim and his children agreed earlier to pay $3.6 billion in a separate civil case. And coming up, Delivery Hero is hoping to raise as much as $1.5 billion from the IPO of Talabat. We'll get the details and discuss the flurry of listings in the Middle East next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Delivery Hero is seeking to raise up to $1.5 billion from the IPO of its Middle Eastern unit, Talabat. The deal values Talabat at up to $10 billion at a time when the Middle East is seeing a flurry of listings. CEO Tomaso Rodriguez spoke to us last week about why the firm is choosing to go public now.
Talabat is a company that's been around for 20 years. We're a local company. We were born in Kuwait in 2004. And since then, we expanded in 8 markets across the GCC, Egypt, Jordan, and Iraq. 119,000 riders, 65,000 partners, and more than 6 million active customers. And I think now is the right time for us to open up and get a good mix of both local and international investors.
Really interesting to speak to the CEO. Let's broaden out the conversation and bring in Bloomberg's Laura Gardner-Cuesta, who's been following all of the IPOs in the region. It's been quite a busy time the last couple of days. So this IPO potentially puts a valuation tag of $10 billion on Talabat. That sounds quite sizable. They're looking to raise $1.5 billion. How does that compare vis-a-vis market expectations?
So actually, yes, this would make it the third largest IPO in the region after Oman's OQ Exploration and Production and Lulu's IPO last week. But compared to what we had been expecting, the valuation is slightly lower. So we had seen analyst reports that pegged the valuation for Talabat at up to $14 billion. So this valuation is slightly more conservative. And I think one of the reasons why this might be the case is that we've seen pretty muted performance in Lulu's IPO, for instance. And despite the fact that that IPO was significantly oversubscribed and that we saw the deal was upsized, the secondary performance wasn't stellar, shall we say. Yeah. And the reason why some investors have said this is because the valuation was pretty full for Lulu. So I suspect that Talabat has seen this performance and said, let's not push too much on the valuation. Let's leave something on the table for investors.
That makes sense, given that it's coming on the heels of Lulu. I was actually speaking to the Spinneys CEO last week, and we were talking about, I was talking about the fact that since the IPO, the stock actually hasn't done a lot, even though their numbers have been solid. So again, perhaps something to speak of vis-a-vis the valuations there. But more broadly speaking, it has been a busy couple of weeks with these IPOs. What does that mean for the rest of private sector activity and the potential to see more listings of the kind before the end of the year?
So look, I think exactly what you said. The Spinneys example is perfect because I think there's a bit of a trend within the private sector IPOs that we've seen. The performance hasn't been that stellar, despite the fact that a lot of these were significantly oversubscribed. We've mentioned Spinneys, there was Faki Care Group in Saudi Arabia as well. And I think there's an argument to be made, and I've certainly heard this from bankers, to say that the incentives of state-owned IPOs are slightly different to the private sector IPO. So a selling shareholder in a state IPO might be more willing to leave a bit of a discount on the table for investors, whereas obviously a private sector shareholder is...
They want to maximize value for
exactly.
themselves.
So I think this balance is something that Talabat will have to strike, and we'll see this during the conversations, I guess, that they'll be having with investors over the next few weeks, and we'll see how this plays out.
And sort of, does that get factored into post-IPO performance as well, the state-owned companies versus the privately held ones?
So I think it's not always the case, and there was the case with Oman's exploration and production that also didn't perform very well. There's always some other factors at play, but it's certainly something that we've seen in the private sector IPOs, at least, that perhaps there's been a bit of a push on the valuation side. And in Talabat's case as well, there's no direct state link. So we'll see what they come up with in terms of cornerstone investors. It's a German shareholder selling the company, so it's a bit of a slightly different story than what we've seen so far.
Yeah, so interesting. Well, let's keep an eye on how this Talabat IPO goes. Bloomberg's Laura Gardner-Cuesta, thank you very much. Well, a quick look at markets before we head into the second hour of our show. Equity futures are leaning towards the green. S&P futures up 0.2%. The Nasdaq up a similar amount. And even European futures also, which have not had a good run as of late, leaning towards the green as well. Building up on a slightly more positive session for Wall Street yesterday, with the majors all ending slightly positive as well. S&P up 0.4%. The Nasdaq up 0.6%. But that is it for the very first hour of Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for the second hour as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. We'll be back in a moment. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Lebanon and Hezbollah have reportedly reached an agreement on a U.S. plan for a ceasefire with Israel, as one of President Joe Biden's senior Middle East advisors is on his way to Beirut. Asian stocks follow Wall Street gains as treasuries halt a sell-off. The Nasdaq 100 also ending a 5-day slide ahead of Nvidia's earnings report tomorrow. And drama in Rio. U.S. President Joe Biden, Justin Trudeau, and Giorgia Meloni missed the family photo at the G20 summit. We have the latest on what came out of the leaders' gathering. Good morning. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Great to have you back, Jumana.
Yeah, thanks for joining me on the second hour of the show, Jen. Good to have the company. All right, let's check in on how some of these markets are faring. So the Wall Street close yesterday was marginally positive. This after 5 days of declines, back-to-back declines for the Nasdaq. Some of those Trump trades faltering throughout the course of last week. Though a bit of positivity on the screen this morning, both S&P and Nasdaq leaning towards the green once more, up about 0.2%. We've been talking about Nvidia earnings. That's going to be a big focus for investors throughout the course of this week, in addition to who might be President Trump's selection for Treasury Secretary. So that's going to be a big driver for markets as well. 10-year yield sitting at 4.40. We have rallied 3 basis points. We're actually sitting at a 2-week low. So we did come a long way in yields very, very fast. We've now slowly started climbing back down again, sitting at 4.40. But again, people are pricing in the possibility of higher inflation and a much shallower rate cutting cycle out of the Fed. All of that is getting factored into the yield curve here. And then Brent, we have sitting just below $74, $73.44. We saw a bit of a spike yesterday, up 3%. But again, there continues to be downward pressure on the energy complex. Our terminal chart today, taking a look at the respective ETFs of Bitcoin versus gold. And this one is interesting because up until, well, just a couple of weeks ago, until the election, you had gold outperforming in price terms, but also in terms of inflows into gold ETFs. All of that has changed in the last few weeks. You can see the yellow line, which is the gold ETF, has dropped, while Bitcoin ETF momentum and inflows has started to pick up. And this just encapsulates how much excitement there is around cryptocurrencies and also money that's going into Bitcoin. All right, let's check in also on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just give us a run through of how these markets are faring.
Yeah, we're seeing Asia stocks higher, but this is after a really trying week, and we are seeing how lower yields, the softer dollar is helping equities in Asia along. But I also wanted to highlight how the moves in the greenback are playing out across Asia FX. Look at how it's still really soft on the renminbi, and this is as traders assess China's fiscal stimulus measures. They don't seem confident that China's going to be front-loading enough stimulus next year to kind of tackle Trump's tariffs. And of course, this is coming against the backdrop of really weak growth domestically. And some of our colleagues have been writing on the MLive blog how we're seeing them pretty determined to hang on to those yuan short positions. Apart from renminbi, going the other direction today is the Japanese yen, and that weakness that we saw yesterday was no thanks, of course, to Ueda trotting out the same sound bites about the BOJ's path, but today getting a boost after verbal intervention from the finance chief who warned against sharp moves in FX. That's what we're seeing in Asia today, guys.
Thanks so much, Avril Hong in Singapore. We'll check back in with you in just a bit. Let's turn to the Middle East, though. Lebanon and the Hezbollah militant group are reported to have reached an agreement on a U.S. plan for a ceasefire with Israel. Now, the Reuters story says a U.S. official cautioned that negotiations were still ongoing. Meanwhile, Amos Hochstein, one of President Joe Biden's senior Middle East advisors, is said to be on his way to Beirut to continue talks. Let's bring in Bloomberg's Dan Williams, who's in Jerusalem for us. So, Dan, we're hearing the Lebanese group still has some comments, apparently. I mean, is this potentially the beginning of the end of the war?
Good morning. That's an excellent question that many in the region will be asking themselves. This is now a 13-month-old war. It has seemed open-ended for much of that time. I think, as you noted, the U.S. envoy, Amos Hochstein, is meant to be coming out to the region today. I think if we're looking for a harbinger, if we're looking for a solid indicator as to where this is heading, it will be in his visit, if it indeed goes ahead. Presumably he would come to Beirut first to hear out the Lebanese on their position on this ceasefire proposal. And then he's expected potentially, this is yet to be confirmed, to be coming out to Israel tomorrow. If so, that would suggest the Americans believe there is enough substance to this response to take it to the Israelis, to see if it can be brought to fruition to a full ceasefire. But again, as you noted, there are these comments, as Hezbollah comments has called it. I'm assuming these are caveats, misgivings, perhaps a small print that the Israelis may find unacceptable. The Israeli Prime Minister Netanyahu twice in Parliament said yesterday Israel's position is that in any agreement it wants to retain freedom of action to prevent Hezbollah disarming, moving against the border. And when it says disarming, Israel's also looking at Lebanon's border, specifically the border with Syria, where it wants to prevent overland crossings into Lebanon of weaponry for Hezbollah. That may be a tall order for Hezbollah, for Lebanese in general, but yet again, the group is potentially on the ropes when it comes to its military position over the last 2 months. So it and its Iranian sponsors may have decided that now is the time to cut a deal.
Yeah, so it'll be interesting to see the developments out of Hochstein's potential visit to the region as well, as you mentioned. But Dan, here's an interesting question for you. Why does there appear to be progress on the Lebanon ceasefire, but not on a ceasefire in Gaza? For so many months of the summer, we were talking about the ongoing negotiations with the various mediators in the region. It feels as though a lot of those discussions have sort of simmered out or died down as of late.
That's a very good point, not least as this war began in the Gaza Strip with that Hamas attack, the surprise attack on Israel of October last year. It's worth noting that even though this is a multi-front war. These are two fronts of the same war. They're actually quite different. Israel has overrun the entirety of the Gaza Strip, save a few pockets of Hamas resistance. It has also defined its goals in the Gaza Strip as including the destruction of Hamas as a governing and as a military force. Its objectives and its achievements in Lebanon have been more limited. It is not looking to destroy Hezbollah. It is not looking to overrun the country. Its incursions in the south of Lebanon have been quite limited. We're talking only a few kilometers into Lebanese territory. So potentially it has less leverage, and Hezbollah is in a position to perhaps set its own terms in a way that may actually bring those forward in a way that Hezbollah deems acceptable. Hamas is pretty much with its back against the wall in the Gaza Strip. It's lost its leader in the Gaza Strip only a few weeks ago. And there is a sense there, not least because it still holds around 100 hostages, that it may be going for broke in terms of simply refusing anything other than a deal that would preserve itself, its own survival in the Gaza Strip. And that is something Israel has deemed unacceptable.
Yeah. How much of what is happening now and the fact that there's perhaps a last-minute diplomatic push out of the Biden administration comes in anticipation of totally new representation from the U.S. in the region in a couple of months? And just last week we were reporting that there will be a new Middle East envoy, no surprise, obviously under a new administration, Steve Witkoff. You have other names that are being put forward that perhaps may be more sympathetic to the Israel standpoint here. How much of what we're seeing now, these negotiations, is just Biden's last attempt to get something over the line?
Biden may indeed be hoping to achieve a legacy moment, if not a peace deal, and peace is profoundly elusive in this part of the world. We're talking about parties with no interest in a lasting peace, one with the other, but at least a ceasefire that would itself be welcomed, certainly by the administration, certainly by many in the region. I think the dynamic with Trump's election, his re-election, is that Iran and its allies, including Hezbollah, including Hamas, realize that come January 20th, they may find a far less sympathetic or far less open, far less accommodating president in the White House. Again, there's no direct engagement between the United States and these groups. Nonetheless, the United States has tried to encourage ceasefires rather than perhaps accepting Israel's idea of a full victory eventually. It could be that President Trump will not want that, or will not be sympathetic to that point of view, and will urge Israel to get the job done. At the same time, he is wary of war. He's not a president, or he won't be a president who wants a war on his watch. So the Israelis may be aware that they're expected to, quote unquote, finish the job, and that's why they might be open to a deal at this point. So ironically enough, fighting parties, warring parties, for very different reasons, might be feeling the same dynamic, the same momentum toward finding some sort of accommodation at this point, which will douse the flames ahead of January 20th.
So interesting and ironic, I would say as well. Bloomberg's Dan Williams in Jerusalem, thank you so much for the reporting. Well, President Biden's decision to let Ukraine hit targets inside Russia has failed to galvanize broader allied support for Kyiv in a sign of the outgoing president's waning influence. The U.S. president has been meeting with G20 leaders in Rio de Janeiro. For more, let's bring in Bloomberg's Greg Sullivan. I thought it was interesting, well, number one, that the G20 already put out a communique. It's strange that they do that on the first day, but the language with regards to the ongoing war in Russia has been sort of watered down. There was no direct criticism of Russia in this communique. How should we read it?
Well, that of course, is interesting, and there has been pushback from certain leaders. Scholz was very outspoken in expressing disappointment in the wording of the language, especially on the wars in the Middle East and Ukraine. France was also disappointed, and they are pushing for stronger wording, even after this initial draft has been circulated. But again, it reflects a broader disagreement among G20 nations. It's a big group of countries coming from different vantage points. Russia is also at the table. It's going to be hard to get consensus among these leaders. And particularly in this G20, we're seeing that diversity of opinion and that struggle to get consensus, especially on issues like this war.
And Greg, this is Jennifer in Johannesburg. It's fascinating. You mentioned how this G20 is really showing the stark differences among these nations. Where are we seeing other rifts come up with a lot of these leaders? I mean, where are we seeing a lot of the fractures that exist in the G20? Perhaps they weren't there 10 years ago that are there now.
Well, aside from the wars, which we just discussed, there's also the issue of trade. That's looming heavily over this G20. We saw Xi Jinping call for more free trade and for nations not to use trade as an area for battle, among other disagreements, and for quick resolution. We've seen Lula push for more reform at some of these international organizations like the UN and the WTO. And of course, looming over all of this is the fact that in 2 months, the U.S. will have a new president, Donald Trump. And he, again, with trade, is promising tariffs and will definitely shake things up. So that's been looming over a lot of these discussions and a lot of the meetings that are happening at the G20.
All right, we have to leave it there. Bloomberg's Greg Sullivan in Dubai. Greg, thanks so much for that updated report. Now, still ahead, we're going to be speaking to the Ecobank CEO as the lender issues its first Eurobond on the London Stock Exchange. But up next, bond markets keep a close watch on President-elect Donald Trump's plans for his new administration. We'll get the latest from the Treasury market next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian equities are higher following gains in U.S. stocks after Treasuries halted a sell-off that had pushed 10-year yields as high as 4.5%. Traders are also closely watching any news around President-elect Donald Trump's incoming administration. For more, let's bring in our MLive strategist, Mark Cranfield, who is joining us now. So, Mark, the question of the day from the MLive team is really how long will the U.S. dollars rally last? We, of course, saw strong economic data in the U.S., then again bolstered by Trump's supposed expectation that he'll be America first. But how long can we actually see this being a strong run for the currency?
It'd be surprising if it didn't go well into next year. If you look at the path of relative interest rates between the central banks, the Federal Reserve may have a little bit more rate cutting to do, but probably not as much as is priced in to interest rate markets. Traders are already beginning to rethink about that. So it's a coin toss whether the Federal Reserve cuts rates again in December. If they do, they quite likely will signal a fairly long period of holding after that, which will help to support the US dollar. And then in contrast, you're going to have European Central Bank, Bank of England, other central banks around the world will be pretty keen to lower interest rates to support their economies, because knowing that there's a risk that there could be a trade war with the United States next year. Of course, the outlier there is the Bank of Japan, but even what we've heard in the past couple of days suggests that they are not going to be raising interest rates this year. That's again something to be deferred into the year ahead. So people have built up large dollar positions probably are not going to be deterred in the near term. The risks really go back probably into the middle of next year when people start to assess overall what does it mean for the US in terms of who is in place in the various ministries in the United States, what kind of policies are they enacting, and how isolationist does it make America? Because there is certainly a risk that you get the global investor base going against the United States. There comes a point where they don't agree with the type of policies and they sell the US dollar, they sell treasuries, and possibly even equities as well. That's something for months down the road, but there is certainly a risk that if America makes mistakes with its policy in relation to the rest of the world, the US dollar could well be punished as a result of that. But that's not something front and center on people's minds at the moment.
Yeah. Mark, while you were speaking, I just took the liberty of bringing up a chart, and I plotted the performance of the USD over the last couple of months right next to the performance of U.S. yields. And they've been moving in tandem as well. But over the last week, what we have seen is it feels as though the sell-off in U.S. yields has come to an end. We're sort of stabilizing around here. We're back at a two-week low again. But the dollar continues to be one of a trade of strength or trade with strength. Why do you think that's the case? Why is the USD perhaps a more obvious trade at this point than the continuation of higher yields?
It's a very clean way of expressing your view on where the United States stands, what might happen if there are tariffs on a broad base. If some of these things that we've heard where the United States is going to hit most of the world with different degrees of tariff, then the US dollar is a likely beneficiary in the short term against most things. So it's a relatively straightforward thing to do from that point of view. The foreign exchange markets are extremely liquid, and people have been running with bullish dollar trades for a while, and they're doing pretty well out of it. In contrast with the Treasury market, you have a lot more complications at work there. You have fixed income portfolios who will come into the market from time to time, as we saw this week. When the 10-year yield touches the 4.5 area, you have targeted buying, which will reduce the impact on the market there. So that kind of thing will kick in from time to time. It will help to cap where US yields are going. We probably would see the same again if the 10-year reached 4.75 or 5%. We would see people coming in to buying quite large quantities around there. That's a different strategy to what's happening in the dollar market. But certainly if for some reason US yields were to change direction and go lower by 50 or 100 basis points, it would be very difficult for the US dollar to sustain the kind of path it's on now. But that is not what most people expect. They expect yields to stay relatively high in the US, especially in relation to most of its G10 partners.
And life strategist Mark Cranfield, always good to talk to you and for giving us some perspective on what is exactly going on with these markets here. Now, coming up, HSBC has asked hundreds of managers to reapply for jobs in the firm's newly formed division as the CEO, George Al-Hidri, steps up cost-saving measures. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Bloomberg has learned that HSBC is asking hundreds of managers to reapply for jobs in the new corporate and institutional banking division as the bank continues to streamline operations. Let's get more from Deals and Banking reporter Harry Brompton. Harry, just walk us through this announcement or reporting that we put out yesterday suggesting that some managers in these banking jobs will have to reapply for their own positions. What are they trying to do here, management-wise?
Yeah, thanks. It's an interesting move and not out of line with what's going on in many banks globally at the moment. We've seen it over the last couple of years. Investment banks, as large and small as Citibank, has been on a realignment trend for quite some time. Standard Chartered, another large international bank with a long history and presence in many countries, particularly strong in Asia, also has been under similar strains. So what we're seeing here, I mean, it's particularly pronounced with HSBC because, they've been around. I mean, it's been, over 150 years since they started out in, obviously as the kind of gateway to Asia, where they, in the early days only had 7 branches and, had a footprint across 7 countries. Now they've got a presence in over 60. The challenge here, and it's incumbent on their cost structure to really rationalise that, is a lot of fiefdoms over a lot of areas that may be only marginally profitable. And you're going to have to remake these businesses and, reset the cost base. And that's what reapplying for these jobs is all about. As the economic outlook for banking continues to get harder as rate cuts come on the horizon and lower margins for banks across the world.
And Harry, what exactly have we heard from the top brass about this? I anticipate a lot of managers are continuing to be a bit nervous about this, but the top brass must have to reassure people that this is in line with the strategic plans for the bank.
Yeah, look, I mean, conventionally, the lines across all these things is that, the remake is going to make the bank stronger. It doesn't reassure anyone about their actual jobs, but the institution's strength going forward is that it'll emerge stronger from these much needed cuts. There's going to be a need to realign based simply upon what shareholders need. If they keep if they don't reset the cost base, they're not going to be able to award the strong dividends and buybacks that investors in the bank have almost come to rely on and actually need to see from the bank because of the pressures on the share price. That's what the investor base has become accustomed to, and in order to get there, given the revenue outlook for the bank, that's kind of the moves that they need to make.
It's a fascinating story. Deals and banking reporter Harry Brumpton joining us there for that Bloomberg exclusive. Harry, great to have you. Jumana?
Yeah, it'll be very interesting to see how this reshuffling and new strategy plays out for HSBC in the coming months, Jen.
Yeah.
All right, coming up, we are going to be talking about Nedbank's reinvention plan. The South African bank looks to nearly quadruple its profits from elsewhere in Africa over the next decade. But before we do that, just a quick look at equity futures before we head to the break. Well, that is a picture of Nedbank, up 39%. But in general, equity futures are doing quite well, up trading in the green after a positive handover from Wall Street yesterday. This is the picture for all of those main futures as we head into the European Open. We'll have all the details next. This is Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. Lebanon and Hezbollah have reportedly reached an agreement on a U.S. plan for a ceasefire with Israel, as one of President Joe Biden's senior Middle East advisors is reportedly on his way to Beirut. Ecobank is to issue a €400 million Eurobond, making it the first public Eurobond issuance on the London Stock Exchange by a financial institution in sub-Saharan Africa since 2021. We will speak with the CEO, Jeremy Awori, on what it means for investment in Africa. Plus, BlackRock gets a commercial license to operate in Abu Dhabi as the world's biggest asset manager deepens ties in the region. It has just gone 7:30 a.m. here in South Africa. I'm Jennifer Zabisadja in Johannesburg.
And I'm Jumana Bersachi in Dubai, where it has just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Yeah, great to be here, Jumana. Let's take a look at where markets are positioned ahead of the trading day. As you can see, a bit of upside green, at least for U.S. equities. That's welcome news after what we saw last week. We see futures for S&P and the NASDAQ both pointing towards the green. It's notable because what we did see from the NASDAQ yesterday, the index actually rebounded and it jumped, largely led by Tesla and this report that we got about Trump's team reportedly looking to relax rules around self-driving vehicles. Investors, though, of course, are awaiting results for NVIDIA. We get those tomorrow. Potentially, that will show some indication for where we see at least U.S. equities going. If we take a look at the U.S. 10-year yield, we are seeing it slightly lower. As you can see, yields there right now at 4.40%. Of course, a lot of focus on what we do see from the Trump transition team and, of course, what that means for inflation and then thereafter what it means for the Fed and the decisions that they decide to make. And we also have Brent crude up here, up just above $73 a handle, also pointing towards the upside. I'm also paying close attention to what is happening in emerging markets. And that brings me to this next chart, because we are seeing emerging markets bouncing back ever so slightly after the U.S. election. We saw both emerging market equities and currencies having a bit of a bumpy ride. But right now, we're seeing the MSCI index for EMs having their third day of upside in a row. Potentially that continues. But this is just a look at what we've seen in the past 2 weeks. Potentially we'll see that upward trajectory continuing there. But let's just stick on really the drivers for what we are seeing from the MSCI index, and that is China and Hong Kong equities. That brings me to Avril Hong, who is standing by in Singapore. Hey, Avril.
Yeah, Jen, we're seeing Asia stocks bouncing back, as you alluded to a short while ago as well. But no, it was after a really trying week. I think we saw like 4% declines on the MSCI Asia Pacific. But I wanted to draw your attention to what we're seeing on dollar yen as well. You guys have been talking with Mark Cranfield of the MLive team about how it's really difficult to see an environment in which the greenback doesn't march higher well into next year. What is this going to mean for dollar yen? You don't have to look look very far back to yesterday after UEDA didn't give any clear signal about a potential December rate hike. We have Japan CPI numbers due on Friday as well, expected to show a bit of a slowing from the prior print. And then you have to think about the political backdrop in Japan, which also complicates things towards a future rate hike from the BOJ. So it all has the makings for dollar yen to just climb higher. And for some of these analysts and aggressive traders, they think the path is clear for us to see 160 on dollar yen, guys.
Avril, thank you so much. And as you say, dollar yen continues moving higher. Now, elsewhere, Nedbank is looking to reduce its dependence on South Africa and increase its profit from other African markets nearly fourfold over the next decade. It is planning to build scale in booming sectors such as natural resources and renewable energy. Let's bring in Bloomberg's Ndiro Ganga, who joins us now from Kigali in Rwanda. Ndiro, talk us through this new strategy by Nedbank. What are they trying to achieve here?
Jumana, so they have a war chest of about $662 million sitting in their books by the end of June. And like you said, they're looking to build scale in booming sectors such as natural resources and renewable energy. And they're hoping that as opportunities expand across the continent in these key sectors, it will drive a shift in their revenue mix. If we map out some of these countries, we're seeing a surge in Namibia's mining and green hydrogen projects. We're also seeing a lot of promise in Mozambique's liquefied natural gas project. And they're also looking to go into Kenya and tap into the region's infrastructure financing. And this diversification can be attributed to two things. On one hand, 90% of their profit comes from South Africa, and in the next 5 to 10 years, they're hoping that they can lift their profits in Africa to about 50% from the current 9.2%. And executives say 20 to 30% is feasible, almost up to 40% if they keep growing in the trajectory that they're growing, and come 2029, there'll be a really different bank. But there's also something to be said about the sluggish pace that the South African economy has been growing at. IMF projects 1.1% this year in comparison to sub-Saharan Africa, 3.6%. And this can explain why some entities are beginning to expand their horizon into East and West Africa. But then it comes with its own unique set of challenges, including political stability, regulatory environment, and currency volatility.
Yeah, of course. Ndiro, let's just stick, though, on what we are seeing from the South African economy, because we have seen strong performances, at least on the equity side, since the election earlier this year. Talk to us about Citibank, because they're actually anticipating even stronger performance, potentially.
Mm-hmm. And they're saying that the coalition government has made a good step, and they're prioritizing economic growth and lower interest rates, which are playing in the market's favor. And even though the Johannesburg bourse and also the rand have taken a beating since President Donald Trump came into power, they've recorded steep losses. There's something positive about South Africa's political stability and also relative ease of doing business, which will play in their favor in the long run. We've also seen S&P lift their outlook on South Africa's credit rating to positive, and they also attribute it to political stability and also reforms that have been undertaken by this administration. And this has gone a long way in boosting the rand stock in the market.
Yeah, we'll see whether or not that continues. Thanks so much, Bloomberg's Ndiro Ganga there in Kigali, giving us the latest. Now, from one lender to another, let's turn to Nigerian lender Ecobank, because they are issuing a $400 million Eurobond in London this week. It is the first public Eurobond issuance on the London Stock Exchange by a financial institution in sub-Saharan Africa since 2021. We're pleased to be joined by Jeremy Awori, the CEO of Ecobank, who is there in our London studio for us. So, Jeremy, great to have you. Talk to us about the timing. Why now? We just mentioned how significant this is for a sub-Saharan African bank, but why now?
We're at the, firstly, great to be here. We're at the phase where we are implementing our growth, transformation and return strategy for the next strategic horizon. And we're raising these funds in the capital markets. We're confident in our strategy as a bank with the largest presence on the continent with 35 markets. We've got an exciting strategy for growth and transformation, and we're sharing that with the market. And we were very confident that we would raise these funds within the market and took this bold step of taking this decision to come to market.
Let me just ask you about market conditions, though. We've been talking about the move higher in yields around the world, and I wonder whether you were put off by the fact that duration is moving a lot higher, and your financing costs ultimately are going to be higher on the back of this decision to issue the bonds right now.
Yeah, so we've already issued the bonds, and we in fact, to be honest, we did it very successfully. We explained our diversified banking model across the continent, where we've got many exciting opportunities in many of our markets. In fact, we are probably the most diversified bank in terms of countries and in terms of businesses. We've got an exciting model around payments. So when we explained our story, we actually were oversubscribed by 2 times. So we've already technically raised the 400 million, which was more than we actually needed. But we really feel at this point that these funds are essential for us to execute our growth, transformation and return strategy. And when we told our story and explained our strategy, the markets took it very positively, hence being oversubscribed. And we're confident we'll be able to execute that strategy and make a difference in terms of growing our business, impacting regional integration, financial inclusion, payments, as well as support countries and economic growth in the coming years, and in a sustainable manner that will reward all our stakeholders in the process.
Jeremy, you talk about the diversified banking model across the continent. I'd be remiss to not ask you about Nigeria. I've seen you talk about the difficulties that you've had, at least in that market. What does this mean going forward for the bank? Do you think the worst of at least the Naira volatility and what we've seen there is behind you?
Nigeria is obviously a core market for Africa. That is very clear. And for us, it's an important market as part of our 35 markets that we operate in. We're investing in the business. We see lots of opportunities when you consider we've got a 60 million plus bankable population. We've got lots of opportunities for value addition. We see significant opportunities in the retail and SME banking segments, in addition to payments. So we are optimistic. We're using technology to grow our business, which will allow us to better manage our efficiency, our productivity, while delivering top-class services to our customers. So there have been changes within the market. It has been a challenging period, as you've indicated, but we're still optimistic when we look to the medium to long term, and remain committed to making a difference within the market and growing our business.
Have you been able to meet some of the requirements that we've heard from the Central Bank of Nigeria? We've seen a number of banks within the economy actually struggling to meet these capitalization requirements. Where is Ecobank at this point?
So the regulators did implement some new capital requirements, and I'm glad to say we've already met the requirements, which were 200 billion naira. We've met those requirements ahead of the 2026 deadline, and that's positive for us, shows really our commitment to growing this business and transforming this business in the future. So we're really poised for the business transformation and looking sort of forward positively. We're also looking at Nigeria's role, excuse me, Nigeria's role in terms of a regional trading player within West Africa, and that also plays to our strengths in the markets in which we're present.
Well, speaking of West Africa, there's been an exit of some of the legacy French banks. And I wonder how you see that creating an opportunity for Ecobank in that environment.
Ecobank has a very long history, within the African market, and in particular the West African market. We are very focused on our own strategy. I guess the other banks have determined what their strategy will be in the region. We see lots of opportunities, in which we can grow our business. So if they make that choice to exit, this becomes an opportunity for us to provide banking services to customers, and we are already embarking on that and seeing strong positive growth within many of those markets. But we see this by and large more as an opportunity for the bank to grow in the future.
Jeremy Awori, thank you so much for getting up early and for speaking with us. That was the CEO of Ecobank. We really appreciate your time. Well, some breaking news just crossing the terminal. We were talking about this on the first hour of the show. Talabat's $1.5 billion IPO has been covered just minutes after the books open. And this is the backdrop to this is that Delivery Hero offered a 15% stake in Talabat in the IPO, valuing the business at up to $10.2 billion. It is one of the largest deals in the region this year, with cornerstone investors, including the UAE Strategic Investment Fund and Abu Dhabi Pension Fund, subscribing to shares worth $250 million. Now, shares are due to start trading on December the 10th, but just in the first few minutes of the books being open, it was fully subscribed. So it tells you that there is a lot of demand for this IPO, and questions about whether the book building will continue. We're probably looking at a very oversubscribed book by the time it closes. Now, coming up, BlackRock continues its growth in the Middle East. The asset manager has received its commercial license to operate in Abu Dhabi. We discuss that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. BlackRock has been given a commercial license to operate in Abu Dhabi, deepening its ties in the region. This move comes as the world's biggest asset manager aims to grow in the Middle East and tap into the region's vast pools of capital. Our Saudi Bureau Chief, Christine Burke, joins us now in Dubai. It's wonderful to have you here, Chrissy. You're here the whole week, so we're going to have plenty of good conversations together. Let's just talk about the decision or the news that BlackRock are opening up a branch or an office in Abu Dhabi. It's interesting that so many of these international companies are announcing their expansion plans in Abu Dhabi, because just a few weeks ago, they were also talking about their expansion plans in Saudi Arabia.
Yeah, that's exactly right. I mean, look, the first thing I will say was that BlackRock has been very busy over the last couple of weeks in the Middle East as it seeks to kind of deepen its ties with a variety of different players in the region. Just in the last 3 weeks alone, we've got a number of news announcements from BlackRock. Obviously, this last one being that BlackRock has received its commercial license to start operating here in Abu Dhabi. That comes pretty quickly on the heels of the announcements that BlackRock received its license to open its regional headquarters in the Kingdom of Saudi Arabia, in Riyadh. And that's not all that BlackRock is planning. So BlackRock also said yesterday that it plans to seek regulatory approval to actually put its Abu Dhabi office in Abu Dhabi's financial center. So really here, a vote of confidence for Abu Dhabi. I think what will be interesting to see in the months ahead is whether BlackRock really leans more into Abu Dhabi or it goes more for Riyadh. I mean, we know that these two cities are vying to be the next big new financial capital of the Gulf. But really, at the end of the day, they're both making advances, but there could only be one, right?
Could there, Christine? I mean, I wonder, you and Jumana were just alluding to this, but what does this say about the competition between Abu Dhabi and Riyadh? Does this potentially ramp up sort of the stakes for both cities?
Well, I think it's certainly a space to watch. And one thing to remember before I say anything else is that we're talking about two cities here that each have $1 trillion in sovereign wealth. I mean, more than $1 trillion, actually. So a lot of potential business to be had and a lot of reason for companies and asset managers and the like to be looking at both of these cities. And when we look at BlackRock, we could possibly consider it as a proxy, if you will, for how the competition is going. BlackRock has so far seemed to be straddling the line between the two, but this latest move is a pretty significant vote of confidence. I want to draw your attention to a quote that came out of the BlackRock statement yesterday. It said, quote, Abu Dhabi has rapidly transformed into a global financial center. Its strategic location, proactive government policies, and commitment to sustainable growth make it an ideal location for capital markets. So that really does say a lot. And BlackRock also, if you'll remember, a couple of months ago or over the summer, partnered up with Microsoft and Abu Dhabi's MGX to secure $30 billion in commitments for AI. So it really has been doing a lot in the Abu Dhabi side of things.
So the question that I'm asking, especially given what we learned out of the PIF, even officially at the FII, was their refocus to domestic investments, is how much of these decisions are based on these types of funds wanting to raise more capital versus actually deploy capital in the region as well. So, just give us some more color on some of the investment incentives that are being offered, say, in Riyadh right now.
Yeah, well, I think, we are seeing a shift in the way that sovereign wealth funds are doing business with the world's biggest asset managers and money managers. We know, based on recent reporting of ours over previous months, that the PIF, for example, is saying to these asset managers, hey, look, if we're going to give you this investment, or we are going to do business with you, what are you going to bring back to us in the kingdom? Where's your skin in the game going to be, essentially? And we heard specifically from the PIF at FII that what they are really starting to see is more co-partnerships. So, I think gone are the days where these money managers are coming to the region and hoping to leave with a suitcase full of cash. And more so, it's now about going into these markets, seeing what kind of partnerships perhaps can be created with the sovereign wealth funds, with the different investment vehicles. And, in Saudi in particular, there are a lot of opportunities, just as there are in Abu Dhabi. I mean, both are, you just look at AI in particular, right? They're both doing so much in that space. And I think there's so much more to come. Next week in Riyadh, there is a World Investment Conference happening. I mean, there's something happening every day in Riyadh, to be honest. But that's not really geared toward finance in particular, but it will be a great place for us to see who is there, what the conversations are around Riyadh, and what it potentially means for this competition.
Yeah, that's a good one. Bloomberg's Christine Burke, our Saudi bureau chief, with us all week this week in Dubai. Thank you so much. Well, coming up, the U.S. Department of Justice is set to push Google to sell its Chrome browser in an attempt to break the tech company's monopoly on the search market. We'll discuss the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Bloomberg has learned the U.S. Justice Department is to ask a judge to force Google to sell its Chrome browser in what would be a historic crackdown on a major tech company. Joining us now for more is Bloomberg Daybreak Europe anchor Tom McKenzie in London. So, Tom, this is not just a historic crackdown. This could be a significant dent to the business for Google. Walk us through it.
Yeah, indeed. Look, we're looking potentially at a pretty significant fracturing of the Alphabet ecosystem, with Google, of course, at its heart. And the key line coming through, the key detail, as you point to, is the compelling by the DOJ of Alphabet to sell off Chrome. Now, we'll see if the judge in April of next year goes along with that. There's no reason to suspect that he will not, but we'll see what happens. That comes through in April. So that would be a key part of this decision coming through from the DOJ, this decision to push through some of these changes, including, by the way, so the sell-off of Chrome, the browser, but also changes around licensing, so compelling Google to license some of its data and search results. That would benefit, arguably, some of its competitors. Also giving websites the optionality to opt out of some of Google's AI products, and the decoupling of the Android ecosystem. There was a question mark as to whether or not they'd force the sale of the Android ecosystem. That doesn't appear to be part of the prescription at this point, but they will be looking at breaking that apart within the Google ecosystem as well, so it's not so confined. This is all as a result of that ruling back in August of this year by that judge that indeed there was this antitrust and monopolistic behaviour that Google had entered into. And this is the prescription coming through from the DOJ that they hope, you would assume, that the judge in April of next year will force on Alphabet and Google.
Huge ongoing story in tech space. Tom, great to have you on our show. Bloomberg's Daybreak Europe anchor Tom McKenzie joining us from London and about to whiz to the other studio for his own show. All right, let's round up Middle East and Africa, Horizons Middle East and Africa. I forgot the name of my show there for a second. The markets. Let's take a look at how equity futures are trading. And here you can see that all of these futures are actually leaning towards the green. So S&P futures up about 0.1%, NASDAQ up at 15 basis points as well. Eurostoxx futures, European futures up 0.3% as well. And this is building on from some more of a positive spin from yesterday's close in Wall Street. We had both S&P and NASDAQ end up in the green. A big focus is going to be on NVIDIA results coming through tomorrow. So let's keep an eye on that as well, in addition to Trump's selection for the Treasury Secretary. So all of that is going to happen later on in the week, and we will keep you informed as to what those decisions are. But that was it for Horizons Middle East and Africa. I got it right this time. Jumana Versace in Dubai alongside Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.